Hello and welcome to Crux Investor. We caught up earlier today with AbraPlata Resources. We spoke to their CEO, John Miniotis, and also Chief Geologist, Dave O'Connor. And if you want our thoughts on that conversation, the project and the company, you can find that at cruxinvestor.com/club. We can also find detailed company reports, commentary from experts from around the world on a variety of commodities and companies. There are training videos. There are summaries of other interviews that we've done. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other. So go and join them at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about today, take a look in the description. Gentlemen, hello.
Hi, Matt. Nice to be here.
Good morning.
Thanks very much for having us.
Okay, so we've got John and Dave. You're about to tell us your story. I'm looking forward to this one. It's a new one to us. I've not spoken to either of you before, but we've worked out before we started that Dave used to live in my part of the world. We're swapping landmark notes, weren't we? Very good.
There's more, but we'll talk technical, I guess.
Yes. Okay, well, look, what we do here is... we just ask you, John, if I may, just kind of kick off with a 1-minute overview of the business, and then we'll kind of pick it up from there.
Perfect. Sounds great. So AbraPlata is a very well-funded silver gold focused exploration company. So our flagship property is called Diablillos. It's located in the mining friendly province of Salta in Argentina. So it's quite an advanced stage project. So we've had over $40 million spent historically on exploration. And the company acquired the project from SSR Mining back in 2016. So as I mentioned, at the moment, we're fully cashed up, so very strong balance sheet. So we have about $18 million of cash in the bank. And our focus, I'd say for this year, is really just to continue to drill aggressively and expand the existing resource base. So there's currently quite a large resource base at site. So we have an indicated resource totaling over 140 million ounces on a silver equivalent basis. And I think, importantly, we're demonstrating that the project definitely has significant potential to continue to grow further. So I'd say, this year we've expanded our exploration program several times based on the good success Dave and his team have had already. And so at the moment, we're undertaking a 13,000 meter drill program, which is about 50% complete. And the goal is to really, define a larger resource, come up with an updated resource by the end of Q1 2021, and then we'll roll that into an updated PA sometime mid next year, which should hopefully show very strong economics for this project.
Okay, thanks, John. Look, just looking back at the history of the company, it's been around 2016 or so. Was much liked back then, looking at the charts anyway. But then there's been a slow decline. You've been there. Well, you and Dave have been there just over a year. Things have changed. Why is that? Is that just a factor of the silver market being strong, or have you come at this story a different way?
Yeah, no. So you're right. We should address the history. So the company, as I mentioned, acquired the project from SSR back in 2016. So at that time, it was an Argentinian-based management team focused down in Buenos Aires. And of course, their goal was similar as ours, obviously to grow the project. Unfortunately, silver hit, some turbulent times there. They weren't really able to successfully raise money. And so AbraPlata, under the former team, essentially ran out of cash. So Dave and myself were actually running another company called Aethon Minerals, which was a spin out of Altius. That was created back in 2018. We spent a year and a half looking for new acquisition opportunities. So Dave at that time was based down in Chile. And so, with the assistance, the technical assistance of the Altius team, we signed over 30 different CAs. We did extensive due diligence on a number of opportunities. But I'd say, from the onset, the Diablillos project really stood out as being one of the better opportunities, if not the best opportunity that was available. As I mentioned, they had run out of cash. Aethon had a bit of cash on the balance sheet. So we decided to combine the two companies together. And so we merged the two companies back in December of 2019. And, since then, we've taken a much more aggressive approach. So we immediately hit the ground running. We started a 3,000 meter drill program even before the merger was officially closed. And so, we came out with some good drill results right from the gates. We're able to successfully raise some money, and then this summer, as silver and gold prices improved, and we came out with some good results, we raised $25 million, and so now we're fully funded, fully cashed up, and continuing to aggressively move this forward.
I get all that, but what I'm trying to do with these conversations partially is also learn, and I'm trying to understand, was that change in attitude? I know you say you're very aggressive, but were people listening to you because Argentina came back in favor because it had been out of favor as an investment jurisdiction, changes of government, etc. Was it because, the price of silver looked like it might be starting to move finally, having been sort of dawdling for a while? Or was it a case of you bringing some scale to the opportunity? I mean, why did people start to listen to you at the end of 19, beginning of 20?
For sure. So as I mentioned, I mean, we hit the ground running. I think the big difference is in the past, as I mentioned, I mean, AbraPlata had run out of cash. So there was no active drill campaign. So as an exploration story, I mean, it's hard to, get behind a story that's not really actively drilling. So with the merger, we cleaned up the balance sheet situation. We immediately, focused on adding value through the drill bit. And so we aggressively started drilling. We brought money to the table. And then, of course, as we executed on that front, and silver prices and gold prices rose this summer, we were able to, raise a significant amount of money and really de-risk the story from that standpoint.
Okay, so we'll get to that. But where did your original money come from to allow you to get, start with the drill bit and get some results which may engender, positive conversations down the line?
So Aethon Minerals. So we were running Aethon. We had about $2 million of cash on the bank. And so we merged the two companies. And then we used that money to start the 3,000 meter drill program.
But you're currently sitting on 4 assets, right? But you're focused on the northernmost in one of the sort of better mining jurisdictions in Argentina. That was their asset.
That was AbraPlata's asset.
So did you inherit any data with which to inform your drilling? And what did you buy?
Oh, absolutely. Oh, for sure. Yeah. No. So Diablillos had over, $40 million spent on exploration. There was a PA study. So we went through that data in a lot of detail. So as we've spent about 6 months in total doing due diligence on this asset. So we looked at the PA study in a lot of detail. We actually created our own geological model. And really we were focused on the upside. So where can we grow this resource? And so, we found a number of targets, the ones that we're currently exploring. So beneath the existing resource, there's a high-grade gold zone. That was the immediate focus. And Dave's our chief geologist. He can walk you through some of the other exploration opportunities that we've come across since then. But certainly we had access to the entire data room.
Right. Okay. But
I might just add that part of our review, we were trying to make sure that there were no fatal flaws. So we carried out we collected 8 samples for metallurgical test work because we thought that could be a problem. It's not. Our results came back even better than those used in the preliminary economic evaluation. So that gave us a lot of confidence to carry ahead with the merger.
Okay. But $2 million is not a lot of cash. So you've got to be very precise and very clear what you spend that on, because if you get it wrong, it's going to be hard. It would have been hard to raise capital. So
absolutely,
what was the debate there? Again, I'm just trying to learn the thinking process of a junior miner.
Yeah, no. So it was definitely we were aggressive right out the gate. So we said, look, these are the targets. These are the immediate high priority targets that we want to explore. So just beneath the existing resource base, we found there was a number of historically very high grade gold intercepts that were never followed up on. So that was the immediate target. So we had Dave initiate sort of a 3,000 meter drill program. But you're right. I mean, if that wasn't successful, certainly we didn't have years worth of cash to fall back on. So that was a critical exploration campaign. And thankfully, the initial 3 results, Dave certainly hit it out of the park. So came back even better than expected. And on the back of that, we generated the needed momentum to raise more capital.
Did you know so probably one for you, Dave. I mean, did you know what you were going after? I mean, you've got silver, you've got gold. I mean, how much data did you have?
We had a lot of information. There's been over 300 holes drilled on the Oculto itself. So we had a lot of information, and in particular with regard to the silver resource, that was pretty well drilled out and is pretty well drilled out. But there we see potential to expand the gold resource, which is beneath the silver resource. The gold resource is at a depth of around about 250 meters below the surface. And so we said, right, we'll try and expand the gold resource. Right now, there's 730,000 ounces of gold in the oxide resource, and we're trying to expand that to over 1 million in this first stage. Our initial drilling I think we got 7 meters of 20 grams per ton gold with associated copper underneath the known resource. And so we said, yes, well, there is potential for a great deal of gold down at depth and along strike at around about 250 meters below the surface. So that's one of the targets we're chasing now. And I could go on to the copper potential.
Well, I mean, talk to me about the copper, because again, we've had questions sent in. People are interested in as to how much you know about the copper, and because you haven't drilled that much at the moment, it might be a bit early to go with that. But what are you seeing? What are the signs?
As I say, what we're trying to do is expand the oxide gold resource so that we can increase the resource for the mill, for the cyanidation process. But while we're doing that, we're drilling through the oxide and into the sulfides. The underlying sulfide gold is associated with copper sulfides. And so we've got some spectacular hits in the copper sulfides. For example, there's 15 meters of 5% copper with 2.5 grams gold. That's pretty exciting, but that's in a chalcocite enrichment zone. And beneath that, there are additional copper resources or copper intercepts. We've got a couple of intercepts in what's the chalcopyrite zone, which is the primary sulfides. There's 2 intercepts, each of around about 30 meters of, one is 1.3% copper and one is 1.1% copper in the same hole. So that goes down to some depth beneath the known zone of mineralization from previously.
Okay, there's probably one for you, John, because again, it's just this journey you've been on. It's been pretty impressive in the sense that you're able to go and raise additional money quite quickly. You got the first tranche of 5 million. Eric Sprott put 3 of that in. You've gone and raised a further, I think it was 18 million. 9.9 of which came from Eric Sprott. So, one, what's the relationship with Eric Sprott, and what are you telling him?
Yeah, no. So first off, I mean, we're extremely delighted to have Eric Sprott's interest. So yeah, no, he's currently our largest shareholder. So he owns about 16% of the company. He came in initially in the July financing, which we raised money at 11.5 cents, and then he wanted to do a subsequent raise, put in more money at much higher valuation, so at 27 cents. So But really, why? I think what Eric saw in this property is, as we were delivering on the drill results, as I mentioned, this already has a large existing resource base. So 140 million ounces equivalent, silver equivalent basis. But we were certainly demonstrating that this has the potential to grow significantly larger than that. So as the drill results were coming in, clearly highlighting that there's a number of high grade targets here on the property. And so, and significant leverage. I mean, just based on the existing resource alone, if silver price moves up $1, the NPV of the project increases by $30 million. So clearly shows you for a company with a $100 million enterprise value, I mean, you get significant torque to both the gold and silver prices. And it's de-risked given that, the existing PA shows that we already have an economic project using only $1,300 gold and $20 silver. So you're kind of getting best of both worlds. You have significant upside potential, but on the downside, you're protected because you already have a resource, a defined resource that works at much lower prices. Okay,
but as soon as you closed that first tranche, you immediately announced going after a second raise. Is it just a reflection of what silver was doing at the time? And, why did Eric go again?
So it was a reflection of Eric's interest, I think, as a CEO of a company. I mean, if you get a call saying, look, Eric really likes your project, wants to become your largest shareholder, I mean, you'd certainly be doing a disservice for your company if you were to, balk at that offer. And so we were not looking for money at that time. We were focused on delivering, coming out with good results. But the demand was certainly there, and we're more than happy to, accommodate that demand. I'd say now, though, I mean, the focus is clearly we're fully cashed up for, really for the foreseeable future, likely probably until a construction decision. So there's no need at this stage. I mean, it was, very clear that, look, we can raise this money. This can take us, well through our current drill program. We can come out with a PA and then focus on a feasibility study as the next stage. So, the decision was made, look, let's raise the money now, and then existing shareholders won't have the risk of sort of being diluted unnecessarily down the road.
Well, let me ask you about that, because what I'm interested in is the decision making that you guys go through. Okay, because I'm interested that you've said we're fully funded through to construction. Why not retain the optionality of seeing what you discover through the drill bit? You've got $18 million here. You've got Eric Sprott as a major shareholder. And if you continue to deliver, then you could just keep drilling for a while. And why are you going for the kind of quick decision? Are you unsure of the silver market? Do you want to get this done and dusted and flip it? I mean, what's the plan here? What's your plan?
No, so the strategy here, I mean, I can walk you through sort of the timeline in a bit more detail here, just so you have a better understanding sort of the longer term time horizon. But yeah, I'd say for Diablillos, the immediate focus is on finalizing the 13,000 meter drill program, which will likely be sometime early next year. So call it February. At that stage, we'll roll that into a PA study by middle of next year. And then, by middle of 2021, say, we can make a decision. Do we want to advance straight to a feasibility study or go through a PFS? But, assuming we continue to aggressively move this forward, we could aggressively start baseline study work for permitting, start the feasibility study by middle of next year. And we would likely have that completed by, say, the end of 2022. So really within a 2-year time frame here, Diablillos could be a much larger project that already is at that construction decision point. And I think that's our main focus is getting it to that stage.
And why is that? Because you want to create some kind of revenue which you then reinvest into developing out the rest of the project? Or are you looking at the other 3 assets that you've got? I mean, why the rush? Why are you thinking about skipping a pre-feasibility stage, for instance?
Well, so this would be our second and optimized PA. So even though this would not be considered a PA study, I mean, it'd be much more advanced stage than other, your first time PA study. So Dave's already doing, expanding the work on hydrology, on doing some additional met test work beyond what was done in the first PA study. So this study is really quite an advanced PA level, I would say. And I mean, we've demonstrated already from the first study that just based on the existing resource, this is already an economic project. And so you want to move that forward. It's one of the few, I'd say, silver gold opportunities that can be built in the current cycle. So there's no sense of, taking a go slow approach. I mean, we're in this to maximize shareholder value. And I think the best way for a company of our size to do that is to drill and advance the project aggressively.
Yeah, we're seeing a few companies who are using a very similar business model in terms of trying to keep the capex low, keep the OPEX low by getting into production sooner rather than later, and using that cash flow to build out. So I don't think there's anything wrong with it. I just wondered why you were planning that as a solution for what you've got. There's no other reasons other than you can.
Yeah, and I'd say just to clarify that. So our goal, as I mentioned, by the end of 2022. Is not the end of construction. It's a construction decision point. So at that stage, you can commence construction. And now whether that's something that we would do or, at that stage, that could be an opportunity to potentially monetize the asset. You either sell the asset or the company outright, or you bring in a strategic partner to help you with construction and ultimately into production. That's a decision that will have to be made at that stage, I'd say.
Well, are you mine builders?
Not at the moment, no. So really the focus, the background of the company is M&A, corporate development, which is my focus, and the majority of our current board members, and exploration. Of course, we have Dave, in his capable hands. He has a team there down at site that have, a good track record of adding value through the drill bit. I think we're demonstrating that at the moment. But yeah, really at the moment, it's exploration and corporate development is the skill set of the existing company.
Okay, again, there's a lot of new and old silver projects have come into the market to tell their story in the last 12 months. Some good, some not so good. What's your take on the market at the moment? Because obviously you've had the election over and done with, but you still have this huge quantitative easing program which has gone on and potentially will need to go on. Is that part of your thesis?
Yeah, no. So I'd say there's actually quite a scarcity of projects that are economic at current prices, or even lower prices than we currently have at the moment. So we see Diablillos as being one of the very few, because of that $40 million that's been spent historically by SSR and previous operators. I mean, we're in the fortunate position that this is not a new discovery where we need to spend the next 5 years here trying to define this. This is quite an advanced exploration project that has the opportunity to grow further. And so, yeah, we see this as being one of the few projects that are actually, economic at $20 silver and $1,300 gold. So we really see that as, being to our advantage. This project has been de-risked along the years. And so we're taking over at this stage. And, our approach is really to be aggressive and move this forward as quickly as possible.
Okay, so 2021, just about drilling, lots of results, no dilution, and then enter 2022 with the ability to make a construction decision. Is that the plan? Simple as that.
Correct. Yeah. So 2021, we'll have the PA study by middle of next year. And then from there, the drilling could go on, but, you have to draw a line in the sand at some stage in terms of when you come out with your updated resource. So updated resource early 2021, PA study by middle of that year. And then at that stage, of course, we're going to have to make the board will have to make a decision. If we're, being as aggressive as possible, would likely go straight into a feasibility study. And then, that could be completed, say, by the end of 2022. So within a 2-year time period.
Okay. As John mentioned, we have to draw a line in the sand somewhere with regard to developing a resource to support a new preliminary economic evaluation. But that doesn't mean to say that's going to be the end of the potential of the project to expand the resources. I can very well see that in the sand and say, okay, let's calculate, let's estimate the resource now to support the PFS, and then move on to exploration drilling on the satellite properties and to expand the potential of the open pit. And we're actually doing that right now. We're drilling to look at the northeast expansion of the current Whittle pit margins.
Okay, that was the question, which was, what's more important to you, the resource expansion or getting into production? And I guess you're trying to get the best of both worlds there.
Yeah, I would say the two are not, thankfully, they're not really mutually exclusive. So, right now we're focused on doing both at the same time. So, as you mentioned, the priority for this year for sure is drilling, completing that drill program. But at the same time, behind the scene, Dave and his team are successfully executing. So, as I mentioned, there's some study work being done that's really going to feed into the PA study. So, I'd say we're probably ahead of the curve from that front. So, the goal is to expand the resource and be able to get to the stage with the construction ready project as quickly as possible.
Right. Okay. And if you do
the occultal resource on which the open pit, the Whittle pit has been estimated, is one particular zone which is about 1 kilometer long, but it's open-ended to the northeast. And at the metal prices of today, of the silver and gold prices of today, there's potential to expand the Whittle pit to the northeast. And there is a drill hole, for example, about 400 meters northeast of the pit boundary, where there's 25 meters of 3.9 grams per ton gold hanging out there. And we're drilling now to try and connect the dots in that direction to try and develop an extra resource. But as John said, we have to draw the line in the sand somewhere.
You do. And you've also got 3 other assets. So what happens with those?
Yeah. So the much earlier stage assets at this stage. So clearly, Diablillos is a crown jewel, and that's the one receiving all the attention at the moment. But certainly, the other assets, within a longer time period horizon, clearly, I think have the potential to give us significant returns. So in Chile, we have our Arcus property that we signed a option agreement with Rio Tinto about a year ago now. So that's a very large, sort of 50,000 hectare land package, multiple copper gold porphyry targets on the property. And so, we could think of no better partner than Rio Tinto, really. They're the ideal partner to hopefully make a discovery there. So, at the moment, they're sort of in lockdown because of COVID. There's been some delays with getting the initial drill program going, but we're hopeful within, the near term here. They'll be able to commence a drill program at Arcus. So that property is in very capable hands. Ultimately, we'd be left with a minority interest if Rio Tinto chooses to exercise and earn into 75% of that project. We also have a similar stage project on the Argentinian side of the border in San Juan province. Again, a very mining-friendly province in Argentina. That one's called La Cuepita. We picked that up earlier this year. And again, a very large land package, 50,000 hectares, a number of targets, copper porphyry, again, potential copper gold targets. That was previously owned by Teck, and we picked that up earlier this year. We have an option agreement there. Again, the focus there is to bring in a major. So you want a major who has the funding, capability, and expertise to potentially make a large porphyry discovery on that project, and we could be left with a minority interest. And then we're, as I mentioned, sort of corporate development, M&A is kind of in our DNA. So we're continuing to look for new asset opportunities. We just recently picked up on another project that's earlier stage again called Santo Domingo in the San Juan province in Argentina. And there we could potentially be drilling that one on our own sometime in later 2021.
Okay, so there's a kind of portfolio component to this as well. How are you finding operating in Argentina? Some people are nervous about being able to get money out of the country. I guess that's not a problem for you initially, but at some point, you're going to have to solve that problem.
Yeah, no, so I'd say the most important thing for investors to understand about Argentina is really that the provinces are extremely highly autonomous. So for the most part, they each have their own set of mining regulations. And so you have very mining-friendly provinces that welcome mining with open arms. Salta and San Juan are two, top tier for sure. We like to say Salta is like the equivalent of Nevada in the U.S. So you have, a provincial government that welcomes mining with open arms, certainly community capability as well. And so, where we're at, there's certainly no issues. At Diablillos, we're surrounded by lithium operations. And we also have Fortuna Silver, which just completed construction of a $300 million project themselves in the province. That's a Lindero project. It's a gold, mine at the moment. So, we have a number of examples as well, where you have First Quantum, where they spent over $500 million buying the Takataka property in Salta. So clearly there's, appetite to build and, acquire and build projects within Salta, San Juan, and a number of other provinces in Argentina.
Okay. And
I might just add that Barrick are very aggressive here as well, picking up projects.
Barrick's also in the Salta province, so they have an option on a neighboring property called El Cavar. So there's a number of opportunities there. And I'd say in terms of getting money out of the country, that certainly has not been an issue. This is not a new frontier by any stretch of the imagination. So you have well-established operations. You have Veladero that's been operating for 20 plus years, Alhambra. There's a number of operations here. You have guys like Barrick, Newmont, Yamana, all have been operating there for well over a decade and have had no issues with drawing money out of the country. So we don't see that as a real threat.
Okay. How much money have you guys put into this project? Well, not the project, the company. Since December, so when Dave and myself took over, we've expanded the drill program a number of times. So as we mentioned, initially we had a 3,000 meter drill program. We expanded that to 8 and now 13. So in total, we'll have about $4 million that we're spending this year on exploration. Prior to that, AbraPlata would have, spent money on exploration and putting out a PA as well. And then
historically, as I mentioned, SSR and Barrick and others have invested over $40 million into the property.
I meant you personally. How much money? How important is this to you?
Oh, me personally, this is a significant portion of my net worth. So we have a very lean management team. So, there's really only 4 of us at the management level. So, between management and the board, we own about 3% of the company. So myself, I have about 2 million shares that I purchased openly in the market and in financing. So, at 30 cents a share, that's over $600,000. So it's definitely a very significant, investment for management and board.
Yeah, but what did you buy them at? Is what I'm asking. So how much did you actually put in yourself?
Yeah. So I bought them, in the open market. I mean, at various price points, and some of those were Aethon shares that I purchased in. So I don't have the average cost, but it was, these shares were not granted. I mean, I purchased them in the open market and participated in the placements. So I got in at the same levels as most of our investors, I would say.
Right. Okay.
I actually bought some at 34 cents, which.
Okay, John. Well, and Dave, thanks very much for running through that nice introduction to your business. But we see each week lots of silver, gold plays coming on here and pretty much saying the same thing. So why should we be buying into your story instead of theirs?
Sure. So I'd say there's a few different items that really differentiate us from a number of our peers. I mean, first and foremost, I think having a very strong shareholder base is clearly key. So we have 40% of the shares held by really our 3 largest investors, which, as we mentioned, Eric Sprott, Diablillos Minerals, and SSR Mining. So, the shares are in very sticky hands, long-term supportive shareholder base. So 40% of the shares, are really locked up for the time being. So we think that gives us obviously a great advantage. Of course, being cashed up is critical for any exploration company where you don't have revenues. Just knowing that, we're not going to have to do a raise every time we announce some good drill results here. I mean, we're fully cashed up. And so we have one way ahead of us where we can just focus on executing, delivering on our goals of increasing the resource, coming out with an expanded economic study. And so really, I think that's another checkbox that we tick off. And finally, I'd say the asset itself has been significantly de-risked. With that $40 million spent, there's an existing large resource base already. There's already an economic PA study available, which works at, $1,300 gold, like we mentioned. You get over 30% IRR. And so, from that perspective, we're not, this is not a high risk, relatively not a high risk story where we're not just trying to make an initial discovery here. This is, we're systematically trying to grow the resource, which we're currently, executing on, I think, very well, and then looking to bring that into an updated economic study by middle of next year.
Okay, well, gentlemen, thank you very much for your time today. Appreciate you making time to tell us that story. So, John, Dave, best of luck for the rest of this year and whatever the beginning of next year holds for you. Pick up the phone when you've got something to say. I'll be delighted to take that phone call. Thank you.
Sounds great. Thank you. Thanks very much.
Thanks for the opportunity, and good luck with life in Cambridge.